Mr. Loo, so the stock market will go up by how much? Will the S&P 500 hit 5,400 points? Will the S&P 500 hit 5,500 points? Some even say 5,800 points. Some even say that, oh no, it's going to crash to 4,900 points, right? So what will it be, right? So today we're going to get a collation of all the top analysts and get a consensus view for everybody. So instead of you watching many videos, doing a lot of research, right? Mr. Loo has done this quick video for you to pull all the best brains of Wall Street for you to see. Let's watch on. So this is the usual disclaimer, not telling you to buy or sell, okay? This is just for education entertainment. So the first question we should ask ourselves is, Mr. Loo, will the stock market continue to rally, right? A lot of people say, no, Mr. Loo, you're an idiot, yeah, you got it wrong, right? This is just a spurious upright and then it's going to fall again. Some people say, maybe Mr. Loo, you're right, it's going to go on, right? So Mr. Loo is going to not give you my opinion. Mr. Loo is going to consolidate all the top analyst views, more particular, coming to an end, what are the things that can change all these views, right? So watch it to the end. This thing might just give you a very rich return. So for this video, please watch to the end. So I think the consensus view is that the stock market will go higher. From NX Wealth Management, Brian Jacobson, chief economist, there is a notion in Wall Street that says that you sell in May and go away because May is always the month that crash. But this time around is different, right? If you sell in May and go away, it doesn't pay off, okay? The second thing, which is my favorite analyst, is this guy called Tom Lee from Fundstrat, right? He's very brilliant guy. When the market was down at 3,500 points, 3,600 points, he really could foresee that the stock market is going to go up in a big way. I follow him very closely, and this is his view. He actually said that time to get bullish, okay, time to get bullish. And he actually did this interview, before the CPI numbers came out, okay? Interestingly, it's a terrible hairstyle right now. It's very funny, okay? The general consensus view is that the market will go bullish, and that's in line with what I said, okay? That a stock market bull run has just reignited. So we had one that started since 2023. Now it is the second phase of a bull run. And actually, this view is now consensus view with many analysts. There is a managing director of RBC Capital Market, Laurie Calvastina. She actually says that, I have a compass, not a GPS. I know directionally you go up. I just don't know by how much, because with a compass, this is direction. She cannot tell with a GPS how much you go up by. But anyway, that's a view that she's taking on. At least you go higher. There's this chief investment officer of BlackRock. He actually says this, okay? Now, she's a bond king. I watched his whole interview. He was very precise. He says that for the stock market to go higher by 10 to 15% is not a stretch. That means 10 to 15% from where it is right now, right? So right now it's about 5,300 points times 1.15. It's about way over 6,000 points, right? Way over 6,000 points. I think that's too far a stretch for me. I'll be very happy if you can end at 5,400. But let's say we go to a lower number of his 10%, is 5,800 points. So to Rick Ryder, he thinks that you'll be a number somewhere between 5,800 points to 6,000 over points, which is, I think, a very far stretch by my standard, but that's what his view is, right? Jordan Jackson from JP Morgan, he thinks that there'll be a 5 to 10% upside from where it is today. I think they're all referring to this year. That means this year closing, not 5 years later, this year closing, okay? Let's say it goes up by 5%, right? It means that you will end somewhere around 5,560 points. That's a lot. That's a lot, right? But if it goes up by 10%, okay, you will end up at 5,800 points. So somewhere between 5 to 15% is a consensus view between these analysts. If this thing were to happen, it will be a wonderful number for everybody to celebrate. I'm already very happy at where the current level is. That's already my projection already. So if it stretched to 5 to 15%, that'll be a huge upside. So some people may ask, why, Mr. Loo, why we continue to go up? It's really an all-time high, The main reason which everybody concluded is right now, the economy is at a very good shape, right? So the economic data that are coming out right now, the economy is just doing super well. The GDP is forecasted to grow very strongly and stably. Inflation is normalizing. and the consumer expenditure is remaining strong. Housing is stabilizing. Every of the analysts that I poll are looking at this economy as very, very good shape. Second is that there is a strong productivity fueled growth, right? And that's because in the past 2 years, there was a severe labor shortage, and now companies have spent a lot of time improving productivity with generative AI, artificial intelligence, cloud computing, robotics, digitization, any form of automation that can go with, these have actually led the next phase of growth, right? So people are counting less and less on labor right now, and this is going to fuel a next phase of growth. Now, interestingly, earnings are very strong, right? Earnings are very strong, and this is the consensus view as well, right? And a lot of the stock market bears thought that the earnings is going to be weak, but actually in inflation, one of the biggest beneficiaries are companies, right? They could sell things at a higher price. So this fuel all the strong earnings, and as a result, okay, we see all the earnings result coming in, and generally they are all pretty strong, and that fuel the extended growth as well. Interestingly, this is a phase where we see a lot of stock buyback, right? Stock buyback. Now, what is stock buyback? So companies, when they make money, they can choose to do three things. Number one, they keep the profit and don't issue anything. Number two is that they could give a dividend, okay? And when you issue dividends, there's generally taxes and all this kind of thing involved. Or they could do a stock buyback. That means the company buy their own shares, cancel some of the shares, okay, buy back their own shares. And as a result, the same market capitalization is now divided by less shares, so it pushes the stock prices up. This thing avoids some of the taxes and things like that. So in this period right now, we notice that there's a lot of stock buyback, okay? So there's $110 billion of authorized stock buyback, right? This is equivalent to buying 2 average size S&P 500 companies, okay? 4 of the Magnificent 7 companies are now buying back $320 billion of stock. That's a lot, right? Apple and Google are announcing stock buybacks, right? So a lot of companies are sitting a lot of spare cash, not knowing what to do. They're going to do a stock buyback as well. So this is the consensus view that right now, because of these stock buybacks, whole market will get lifted up as well. Now, it is important to note that the Dow Jones Industrial Index is an index I rarely look at and I rarely talk about. But the Dow Jones Industrial Index have now hit an all-time high of 40,000 points. The Dow Jones Index is made up of very few tech stocks, but a lot more traditional industrial and value stocks. So this time around is no longer a tech rally. It is the entire market now lifting up. It's not just a little wave leading a front. It's entire tsunami right now that's rising, with the entire stock market now is rising. And that's a very interesting insight that we now have. It is no longer, okay, an isolated few technology companies that's leading a charge, but the whole wave now lifting up. And now you tell me whether this stock market rally is real or not. And it's important for us to also know that there's a lot of funds and companies that have put aside a lot of money, not putting in the stock market. It is also worth noting that there is a lot of money sitting on the sideline because of the high interest. A lot of companies put money into money market where you get, 3, 4, 5% return. You guys, I'm sure, put a lot of money into Singapore government T-bills or some of the fixed deposit and so on. So you missed out the entire stock market, just like many of these private equity firms. So there's a lot of money on the side. How much is it? $6 trillion. $6 trillion US dollars now sitting on the sideline. When the interest rate is being cut, these guys will be wondering, why am I holding on to this cash where it's so much returns on the stocks? Then they will start swinging all the money to the stocks. And guess what will happen to the entire stock market? So this is something we all need to take note of, that the cash on the side, okay, will one day have to swing, majority of them have to swing towards the capital market in the stock market. And when that happens, guess what will happen to the stock market? What will analysts be looking out for in the near future, okay? Or what are the things that we need to be concerned with? Number one is economic data, okay? Economic data. So right now, we are all anticipating that the inflation rate is going to be more dovish, more docile. And if it is so, then this could justify the S&P 500 hitting 5,400 points. And if the economic data for 2025, which is currently being very sluggish, turn positive, then this optimism pickup will also drive power stock because the stock market is forward-looking. Well, it also depends in our next FOMC meeting, Jerome Powell comes out and make a statement. When he make this statement, is he going to be dovish or is he going to be hawkish? If he's going to be dovish and predict, giving some hint of rate cuts and things like that, then the market will react in a very strong way. Both the bonds market and the stock market will go up. And hitting 5,400 points will be probably in a walk in the park. Maybe even 5,800 points to 6,000 points, like one of the analysts said right now. So I need to reiterate the biggest fear that can hit the stock market, which is re-inflation. It is very difficult to predict inflation data, but right now it looks like it's going to be dovish. But if the inflation do spike up again, then we're gonna have the stock market going to a very painful period of volatility, and that's something that we are all afraid of. I don't think it will happen in the next inflation data, but anything could happen. I've taken a position to bet on this not happening, but if re-inflation do happen, then we just got to ride through the volatility. So what are the analysts recommending everybody to do? Well, let's see what they say. Essentially, telling everybody that you should stay invested and keep a balanced portfolio, okay? It doesn't mean that the stock market is going up, therefore we should jump and throw all a single cent in, right? So for me, I'm not putting in a single more cent into the stock market. I put some money into the bonds market to rebalance because right now the stock market has gone too far up. I need to level up my bonds as well. But other than that, I just ride the wave, right? So this is what the analysts are telling everybody. I think it's a very wise advice. Be prepared for some volatility as well. But I think the outlook for at least the next period will be a very, very positive and optimistic one. And if the market do turn otherwise down, there'll be spurious economic data, political data, or whatever that comes out that can crash the market. We just got to hold on and ride through this wave. Okay. So with this, thank you. Okay. And if it does happen, hitting 5,800 points to 6,000 points, congratulations to everybody for becoming rich. Okay. Thanks for watching. Remember to like and subscribe. Join our Telegram channel. That is where I announce any big moves that I make, okay, on a real-time basis. I'll see you. Thank you. Bye-bye.